Welcome back. Let's straight away get to the big story this morning. And can it really inspire confidence back in the bulls? The GST Diwali bonanza that Prime Minister Modi has promised from the ramparts of the Red Fort. Well, let's straight away get to an industry veteran who's been watching taxation for so many decades in this country. Sudhir Kapadia, Senior Advisor at EY, is with us. Mr. Kapadia, thank you so much for joining in. So it really feels like a bonanza, right? Because 4 rates, multiple structures, what is exempt, what is not. All of that, if, as you know, what our sources are also indicating, if it is all boiled down to simple slabs, 5%, 18%, and only very few sin items at 40%, does this look to you like the right way to go?
No, of course, it's the right way to go, Surbhi, for 2 reasons. One is that if you look at the GST equivalent around the world, Europe, if you look at the EU region, you look at Southeast Asian economies with which we should compare ourselves undoubtedly. The reason the tax has remained so sustainable in those jurisdictions is because of this very fact that they have very moderate rates, consistently maintained, and most importantly, very little distinction between price points inter, say, products, very little distinction between varieties of, products under each category, etc. So I think the point here is that the rate has to be moderate, and 5% is by any yardstick very moderate, which I believe will cover probably more than 90% of items as far as at least the number of items is concerned, which is fantastic. The fact that 18% will now be probably and hopefully the higher rate for only certain goods, like, probably automobiles and something else, which is again very salutary considering the kind of rates they suffered today. And most importantly, and this is what government sources seem to be indicating, a point which I made earlier, that no artificial distinction based on price, right? That some item is more than price for so much and so much is less price, a rate is lower. And the composition, as I said, within that product. So I think if it is done in the way it has been announced, and I hope it is done in the way it has been announced, it is certainly salutary. And my last point I will make here is that it is also important that when a new issue comes up, the first impulse of the authorities is to raise multiple notices across the categories of assessees, without first analyzing, whether this is really required, what is the clarity in law required. What happens is notices are first issued, then a thought is given based on representation. Good part is corrective action is taken, but a lot of effort and time and even money of taxpayers is wasted meanwhile. So when we talk of reforms, I am hoping all 3 will be covered, not just rate.
Absolutely, Mr. Kapadia. The one area where there is a lot of expectation, I think, because autos, right, I think is about 1/3 of the GST collections. So it's like perhaps the single largest item in that sense, right? Sources tell us that Centre has proposed a sharp reduction in GST rates on entry-level, two-wheelers, small cars, hybrid passenger vehicles, etc. So some detail here we want to bring to you. And then, Mr. Kapadia, coming to you. Timsy is here with those details. Timsy.
Well, that's right. What government sources are indicating to us is the fact that given that the Prime Minister from the ramparts of Red Fort did actually lay down that the government is working on second generation GST reforms, which could pave way for 2 slab structure, that is 5% and 18%. That is a standard and a merit rate, which could lower down the tax incidence on the common man substantially and is likely to take off from Diwali. Well, just a step forward there, sources indicate that Centre could have sent a proposal lowering GST rates on 2-wheelers and small cars, because Centre considers that these are no longer luxury and thus keeping them in the 28% slab or the highest slab could be wrong. The proposal under consideration is that 2-wheelers with an engine capacity below 350cc could see a cut from 28% to 18%. Small cars below 1200cc engine capacity, which is currently GST plus cess of about 29 to 31%, could be reduced to 18%. Similarly, hybrid passenger vehicles up to 4 meters length and 1200cc petrol and 1500cc diesel engines could be reduced from 28% to 18%. Whereas to end the classification matters, the other passenger vehicles, that is big cars, luxury cars and SUVs, etc., could be kept at the highest slab of 40%. Let's see what happens when GOM on rate rationalization actually deliberates on this matter, whether they agree with the centre's proposal to reduce all the items to a 2-rate structure or not, something that we'll have to wait and watch for. But yes, as of now, these are the key highlights of the proposal.
I got that. Timji, thank you very much for that. Mr. Kapadia, 2 questions. One, what could be the size of, there will be a revenue loss, right? What are you, put it another way, what is the size of the giveaway in that sense that you were expecting, one? And second, are there any sectors where you think there will be, it'll show up in a more aggressive way with regards to a demand response as opposed to others? Go on, sir.
Right. No, it's difficult to estimate till we know what is the final sort of design which gets implemented. But a very, very rough estimate suggests that it could be 70,000-80,000 crores of revenue impact. And let's assume that is the figure for the purpose of this discussion. My view is that this is really what the center faced even going back in 2017 when the states were reluctant to sign on. Let's go back in history, and the reason this government was able to successfully introduce GST is the calculated risk, if I may say, which the government took, which the then finance minister, Mr. Arun Jaitley, took by backstopping or guaranteeing a 14% CAGR increase in the new GST regime vis-a-vis the old indirect tax regime. And that was one of the conditions based on which the states signed up. So the point I am making is that there would be innovative solutions available even today with the center if there is this strong will, as expressed by no less than the Prime Minister, and that too on the occasion of the Independence Day speech, to find these solutions. Coming back to and linking to the second point, Prashant, you made, I personally believe, like in the first case I mentioned, going back to 2017, if there is good tax buoyancy, which I don't see any reason why it shouldn't be, demand certainly should increase. Consumable income should, and don't forget the income tax benefits up to rupees 12 lakhs, which is already now in play from April. So combined with that, certainly overall revenues for the government should improve. That is the tax fiscal policy 101, that with moderate taxation, simplified taxation, tax base increases, collection should increase. So this backstop which the center needs to give hopefully will not be as high, because this calculation, when you look at it on a as standalone basis as of today, without any increase in demand, looks high. But when you assume the increase in demand, which is a fair assumption, that is where the tax buoyancy improves, and therefore the impact on the balance sheet of the government will not be as high, is my submission.
All right. Hi, Mr. Kapadia. Good to hear your thoughts. So tax buoyancy will make up for any kind of shortfall. That's the big call that's coming in. And as we've been mentioning, the centre taking note of some softness in the economy, that's a positive with regard to intent itself. Just a quick question with regard to implementation. The fear is that various purchases will be pushed forward, because now you know that cut is coming in the next 2 months. So in the near term, there could be a bit of a pile-up. What's your take on that? Will that cause near-term softness?
Yeah, no, that's a good point. Well, in consumables, obviously, for obvious reasons, it won't matter. Consumables cannot wait that long. I think it's really the white goods and the automobiles where what you mentioned may play out. But I guess that happens in any kind of tax reform. And for example, even in today's scenario of bilateral tariffs, right, where there is an expectation of either lower or higher tariffs. We saw what happened in the US as well in terms of accelerated imports into the US. So I think some of it is inevitable. But the important point here, that if a roadmap is clearly given as soon as possible, and I think the council meeting is September, we are told, the earlier the better. At least people can plan, and more importantly, the manufacturers, the companies can plan their productions and their dispatches accordingly. So yes, the roadmap earlier the better. Some of it is inevitable, and the more transparency and clarity emerges sooner than later, that would be better.
20th, 21st, the GOMs are meeting. Hopefully, we don't have to wait very long and things are announced quicker. In a market parlance, Mr. Kapadia, it's like announcing, it's like saying that we're going to do a QIP and then leaving it without a, right? I mean, there is an overhang. But yeah, I mean, hopefully this is, of course, the government is cognizant of it. Points taken, very good conversation. Thank you very much, Mr. Kapadia, for joining us. Really appreciate it.